Good evening. Today, in our discussion, we are going to discuss about the revival possibilities of New India Cooperative Bank from the angle of the disclosed fraud versus the kind of financial strength it has according to its balance sheet is what the major discussion point. Let's look at the background. New India Cooperative Bank has total deposits of 2,436 crores spread across 1,30,000 depositors and a fraud of 122 crores which has been detected involving certain bank officials leading to financial stress. When the bank's total assets are 2,898 crores and when the bank's fraud is just 122 crores, why the bank should be shut down and why the bank should be taken in the path of liquidation is a big question mark. All said and done, the fraud amount is equivalent to 122 crores. So when 122 crores fraud can be detected and persons can be identified and the fraudulent assets can be frozen and can be collateralized to recover over a period of time, there the overtures of the system is that DICGC is going to cover 90% of deposit holders. That is to say, DICGC has to chip out almost to the tune of 2,436 crores to cover 90% of depositors, or as they are stating that through DICGC 90% of depositors will be covered means an amount of 2,436 crores has to be covered by DICGC when the fraud amount is just 122 crores. Even if there are some bad assets in the bank to the tune of additional 500 crores and the fraud amount of 122 crores, making the total to the tune of 622 crores vis-a-vis the DICGC coverage of 2,436 is too vast in terms of the insurance coverage. So why to fall in the prey of anybody who wants to acquire this bank at a very low price by covering the 90% depositors through DICGC, whereas instead of paying 2,436 crores, the same DICGC temporarily can lend to New India Cooperative Bank to the tune of 622 crores as a contingency fund, or in the form of an investment, or in the form of a collateralized debt, or in the form of an escrow mechanism where certain debts will be allocated for the recovery of that amount over a period of time, then make the bank restart to be in the business with new management. Then I feel this will make the bank a successful restructured bank by cutting the cancerous fraud that the employees perpetrated. So, why DICGC has to shell out huge money for the whims and fancies of few fraudsters and the future fraudsters who may want to acquire this bank at a very cheap price, after the small depositors are covered in the name of DICGC by making DICGC lose 2,436 crores when the bank requires 522 crores only. Not just that, what we need to keep in mind is the depositor's maturity profile and the security lender's stability is of great importance when we consider the timelines, because depositors hold funds across different maturity periods and not all depositors will withdraw at once if the bank restarts. Similarly, secured lenders are not calling back their loans immediately, meaning there is no short-term liquidity crisis requiring the bank's closure. So, what one needs to do is collateralization of frozen fraud assets to the tune of 122 crores to be recovered by the funding agency DICGC if it funds directly to the bank, and also 500 additional identified any bad assets accumulated with the bank for temporary liquidity with the bank by collateralizing those assets along with some more guarantees from the bank side to pay DICGC to their profits over a period of time will make this bank restart its operations. Not just that, we also need to keep in mind the precedents in India in terms of recapitalization. When we look at S-Bank restructuring in 2020, 10,000 crores were infused to stabilize the bank instead of shutting it down. Similarly, in the case of PMC Bank, an alternative merger was encouraged in 2021 and a stronger entity was sought instead of liquidation, allowing depositors protection. Based on these precedents, RBI, DICGC should prioritize structured recapitalization with reference to New India Co-operative Bank. In fact, it's so unfortunate that the bank's main office bearers, the Bhanus, seemingly ran away to Middle East countries according to some reports. This kind of runouts by the management, key management, in fact makes the people lose confidence in the system. Conduct an independent forensic audit to ensure all fraudulent actors, including board members and auditors, and make them accountable. Implement government reforms, prevent future mismanagement. I think this approach will protect depositors, ensure financial stability, and prevent forced undervaluation of the bank for vested interests. Thank you very much for your patient hearing.